Welcome to this weekly economic focus with me, Isaah, the chief economist here at Alexander Forbes Investments. I'm discussing two main developments from last week that will impact markets and economic activity going forward. The 25 basis point increase in the repo rate at last week's South African Reserve Bank Monetary Policy Committee meeting, and the signing into law of the minimum wage bill by the President. Let's get right into it. The six-member South African Reserve Bank Monetary Policy Committee decided to increase the repo rate by 25 basis points from 6.5 to 6.75, with three members preferring to hike interest rates, while the other three members preferred to keep interest rates unchanged. The division in the committee's preference was also reflected in the market analysts' expectations in the run-up to the meeting, given the improvement in the near-term inflation profile. The bank's quarterly projection model forecast headline inflation to average 4.7% this year, down from 4.8% at the September MPC meeting. Inflation is seen gradually rising to a peak of 5.6% in third quarter of 2019 and averaging 5.5% and 5.4% in 2019 and 2020 from previous forecasts of 5.7% and 5.4%. Core inflation is seen averaging 4.3% and 5.3% in 2018 and 2019, both lower than at the last MPC meeting in September. Looking ahead, 2020's forecast was kept unchanged at 5.5%. Meanwhile, economic growth has been revised marginally lower to 0.6% in 2018 from 0.7% at the previous meeting. And as a result, growth in economic activity will remain lower than the economy's potential until after 2020. In the end, while acknowledging the improved inflation forecast in the near term, the South African Reserve Bank evaluated the medium-term inflation risk to be on the upside. These include the rising interest rates, the reduction in liquidity globally, and the associated potential weakness in the rand, along with other emerging market currencies. The debate was not whether to hike or not, but to hike now or to hike later. To prevent hiking at an aggressive pace later, the SARB decided to hike by 25 basis points now, which will be manageable for the economy to adjust. The second development is that the President signed the minimum wage bill into law, which will put a floor of 20 rand per hour across all sectors when it comes into effect on 1 January 2019. While the bill was largely agreed upon at the National Economic Development and Labour Council since 2015, its impact on employment creation is yet to be determined. However, it will benefit about 6 million employees that currently earn below 3,700 rand per month. This week, we look forward to the release of the BER-RMB Business Confidence Index for fourth quarter 2018. In the third quarter survey, 62% of business executives were dissatisfied with prevailing business conditions. We expect an improvement following some enthusiasm after the Jobs Summit and the Investment Summit, all of which point to more certainty in the macroeconomic policy configuration. Moreover, the recent signing of the minimum wage bill into law could slightly boost consumer confidence. Apart from business confidence, we also expect the FNB-BER consumer confidence, private sector credit extension, and monthly trade data and budget balances for October. We expect trade and budget balances to print wider deficits, which will likely push the currency weaker and bond yields higher from levels we saw post the interest rate increase last week. Globally, this week's focus will be on the G20 meetings in Argentina, which will start on Friday and end on Saturday. The agenda seeks to discuss the future of work, infrastructure for development, and a sustainable food future. Although not on the agenda, trade negotiations between the US and China on the sidelines will likely dominate discussions, as it is one of the biggest risks to global growth. Elsewhere, Brexit negotiations and Italy's budget discussions with the European Commission continue to generate negative news in Europe. So much disagreements and moving apart in a common monetary area and common European market at a time when world leaders are saying globalization is the way to go. That's it for this week from me, Isaah, and all of us here at Alexander Forbes Investments. Goodbye and have a great productive week ahead.